silver is what's called a Giffen good. What Giffen good means is the higher the price goes, the greater the demand. You need that silver. And it's called inelastic, by the way. Silver is inelastic, which basically means you only need $30 worth of silver to make a $1,500 iPhone. You don't care what the cost of silver costs. You need it. And it represents a very small price or a little bit in a high-tech, relative in terms of its cost, a few hundred ounces, maybe in a military grade missile.
JP Morgan flipped from biggest silver short to 750 million ounces long, $20 billion plus, while European banks remain trapped short. COMEX deliveries exploding 58 million ounces in 12 days, non-delivery month. China controls 70% of world silver refining. Export license is required January 1st, shutting down Western supply pipeline. U.S. banks closed 22,000 contracts since July.
COMEX deliveries have been unusually large all year, Kaiser. In November, which is typically not a delivery month, we had almost 17 million ounces of silver and about 1.5 million ounces of gold that were delivered. In both cases, gold and silver, it's not a delivery month. By just the 12th of December, deliveries have already reached 58 million ounces of silver and almost 3 million ounces of gold. JP Morgan, by the way, the Economic Times just came out with a report saying that they hold over 750 million ounces of physical silver. And that's worth more than $40 billion. It says they didn't just stop shorting silver, they actually flipped and became the biggest long in the market. It said that in 6 weeks, JP Morgan added 21 million ounces while closing a 200 million ounce paper short position. So by removing that paper short, they remove the pressure that keeps the price down. And while buying the physical metal, well, this is going to push prices up much higher. They also mentioned that they took 16.6 million ounces out of the registered inventory. And it left COMEX completely gone. We don't know where it went. And when 16 million ounces leaves COMEX, it ain't coming back ever. What does mean something is that the people who in just a handful of days deliver, 58 million ounces of silver and almost 3 million ounces of gold. Who's got the money to do this? You're talking billions and billions and billions and billions every single month, right? Since November, 13 months we've seen this, since last November. The people at this level who throw around that kind of bread, they don't do it just for the hell of it. They know what's coming.
Foreign banks still exposed. Silver leaving COMEX permanently. 16.6 million ounces gone. 169 million moved to non-deliverable vaults. Smart money, industrials, sovereigns, central banks, stand in for physical delivery monthly. Not leverage traders, cash buyers immune to margin hikes. This is geopolitical resource competition, not financial speculation. Silver is inelastic, Giffen good. Higher prices, sucker higher demand. $30 silver and $1,500 iPhone, few hundred ounces and $5 million missile. You must have it regardless of price. Supply shock meeting industrial demand equals structural crisis ahead. Subscribe to Fine Metals for future updates.
Too high, no, not this time. I think it's more about all of the deliveries and the people on margin who stand for delivery. They have to unwind their position. But the idea is get rid of paper claims faster than the real metal leaves, right? But it's not working. It's not working even with lease rates right now around 7%, which are way above normal. It's because the people that are buying this stuff right now are not on leverage. People that are buying this stuff have lots of money and they're standing for delivery. It's kind of like, if you live in a really fancy neighborhood in a gated community down here in Florida, and there are a lot of them, people coming in to buy houses, they're not taking out mortgages. They're coming in and paying with cash. And that's why higher mortgage rates doesn't affect the property in those areas. It's the same thing here. Somewhere in the neighborhood of like 166 million ounces of silver, they moved it 169 million ounces of silver. and they moved it into what's called a non-deliverable vault. Now, this was something that was new to me. I dig in a little bit because I thought either it is or it isn't in the COMEX ecosystem. And it technically, these 169 million ounces, technically they still exist on paper and could be moved into COMEX, but it's legally removed from the delivery system. This is not defensive posturing at all. This is intentional removal of metal from the delivery pool. Starting January 1st, 2026, silver exports will require state trading licenses from the authorities in Beijing. This matters because China roughly refines about 70% of all the world's silver, not just from its own mines, but from doré imported globally, refined in China, and then historically re-exported to Western markets. That pipeline shuts down in less than 2 weeks. And this isn't rumor. I've spoken to mining executives, Sean Kun from Dolly Varden. Yeah, Andy, the Chinese have been flying into Peru and into Mexico and taking metal in the pre-production stage before it's even called silver. They're buying doré and concentrate. So China, the number 2 largest producer in the world, flies all the way to Peru and Mexico, the number 1 and 3 largest producers of silver in the world. Mexico, China, Peru are the 1, 2, and 3. And they're buying doré, which are bars that are crudely refined by the producer or the miner, and then sent in for full refining to a refinery. And the concentrate is a sludge byproduct of the mining process. They're buying this stuff, paying twice what the West will, shipping it back to China to refine it themselves. If the second largest producer in the world does this, then there is no reason to believe that maybe, or to not believe that maybe Samsung is doing this too, where U.S. banks appear largely, if not entirely, out of the silver shorts, leaving the foreign banks and other commercials with most of the remaining exposure. And so if this all blows up, the U.S. banks have gone long. The European banks are the ones that are exposed to all this. So thinking about what Tom Luongo says, all of these things negatively impact the Bank of England, the LBMA, and all of the European aristocrat or old money bank. It's interesting. Now, Tom says, that Trump was upset with the European aristocrats because he believes, and the Bank of England, that they were involved in election interference 2016 or 2020 rather, and the color revolution, all aimed at, keeping Trump out of office. And I want you to think about a couple things and tell you what I see right now. And again, this isn't my theory, but when I put the pieces together, some of these I didn't hear from Tom, but I think about them and put them in. I'm like, yeah, wow, that's got legs. So let's just pretend he is mad at the Bank of England. He's trying to stick it to him. And the European banks, the old money, right? Because one of the things he is trying to do is take money creation away from the Fed. And we'll get to that in a moment. But anyway, so the first thing that he did was to bring all this gold and silver back. Now, for years, gold and silver has flown back and forth between the COMEX and the LBMA, and these Western banks were in concert together to suppress the price of gold and silver. Now, silver, I would argue, was suppressed for the military-industrial complex. That wasn't just the United States. It was France. It was England. It was all of the, all of the Western countries that had strong militaries that used that to keep their thumb on the world, so to speak. And at the same time, gold was used to hold down the price of gold, largely through futures contracts where they go short in New York to drive the price down and go long in London to offset their books. And metal would flow back and forth. And this was done in cooperation between all of the banks in the West. Gold was held down because of something called Gibson's paradox, which speaks to the inverse relationship between real interest rates and the price of gold. So if the West suppresses interest rates for 30 years to create an illusion of prosperity in our 401ks and our house values and keep everyone, borrowing from the bank, using currency, buying bonds, all of the things that the Western bankers would want, you step on the price of gold, right? So this has been going on forever. Well, Trump says, we need to bring all of this gold back because there's tariffs and silver. So, don't worry, it'll all flow back. Well, the tariffs aren't there for this. This was about reshoring, right? So all of this metal has come back, leaving the Bank of England rather vulnerable in terms of the LBMA, in terms of the short positions that they have. And this is a big deal, right? Because you have 140 million ounces, but contracts that say 2 billion ounces can stand for delivery. Where's it going to come from? This is an existential threat. That's number one. The second thing that happened was the move, in my mind, to issue the Genius Act. We're seeing, and at the same time, the largest player in the market flipping from short to long. And that makes this very different. This isn't financial, this is geopolitical. And this is about who controls the materials needed to build the modern infrastructure. So I know on one hand, I'm saying JP Morgan just got all this silver as a U.S. bank, but on the other hand, is JP Morgan more U.S. or are its roots more in the European side of things? And so, yeah, I think it is highly probable, but I wouldn't. So anyways, the bottom line is China, Saudi Arabia, India, Russia publicly said they're adding it to their strategic stockpile. And when they said that, there hadn't been a government to ever say that. The European Union, by the way, made silver critical in 2023. We just did it, and now China is, in essence, doing the same thing and limiting exports. So I think while they haven't made it, gold will be the backbone of the monetary system. Silver is critical to build a digital ecosystem, one that also is needed in military componentry and in solar panels and in, of course, electric vehicles. So the realization, I think, quietly is, and they've been using the suppression of the Western price forever to beat us at our own game by standing for delivery, all of these countries, but, and to accumulate it on the cheap all around the world. But I think, yeah, it's just becoming more valuable than the currencies that are used to purchase it. But their actions, I think, show that as being involved. Now, that's the old money. JP Morgan is the old money. They represent the old European banks. That is the old aristocrat money. They're all tied together, right? He specifically mentions them. The third thing he does is pass the Genius Act, which allows the Treasury to issue, in essence, create money through stablecoin issuance backed by U.S. Treasuries, giving the Treasury more power, taking it away from the Federal Reserve. Now, this is what a lot of people think got Kennedy killed. So again, the Federal Reserve, the old European aristocrat money that stands behind all of these banks, right? So you got this, all the metal coming back, lying about tariffs to reshore it. You've got naming JP Morgan in this suit. You've got the creation of money, in essence, through taking it away from the Federal Reserve, giving more power to the Treasury, and all of this at the expense of the Bank of England. Now, and the banks in Europe, and what's very interesting is that if there was just a report which lets me believe that he is going to leave the European banks holding the bag on the silver short position, which peaked in July, right? And since then, the 5 U.S. banks involved have slashed their net short exposure from 28,918 COMEX contracts to just 6,797 by the end of November. And that is a reduction of over 22,000 contracts. They're industrial users, they're long-term holders, they're sovereign wealth funds, they're central banks. And so all this really did was move the silver from the weak hands to the strong hands who came in and bought it. And you can see that because normally when they raise margins, price collapses like that. Not this time. In fact, it came right back up. And here we are today. This happened on Friday, and here we are today. Silver's up over $2 again to over $64. And so what was supposed to scare the market just turned in, to kind of a shakeout rather. And the leverage got cleaned out and the available silver got tighter and the price floor got stronger. Something to think about. And this is happening at the same time rates are rising in London. Again, lease rates there about 8%. And again, you're talking about how London silver has been the linchpin of all of this, where, you know, their paper claims are backed by very little metal, somewhere around 2 billion ounces of paper claims backed by about 140 million ounces. And that used to work when no one asked for delivery, but now they are. And China, where it is a cross-border settlement system, that is the M-Bridge, where it trades in 7 seconds outside SWIFT interference at a 98% reduction in fees. SWIFT is not compatible with it. In other words, no sanction risk. And it will trade this thing called the unit. The unit is 40% gold-backed deliverable to central banks on demand, 60% basket of BRICS plus currencies. What's interesting about it is that the currencies will be measured in gold ounces, not gold measured in currencies. It's a new way of looking at things. In other words, gold is the benchmark in this new system. But anyways, they're calling it the internationalization of the yuan. The BRICS will slide right onto this, their unit currency. But what the Chinese are trying to do is build all these vaults, the first one in Hong Kong. So if China were to buy oil from Saudi Arabia and pay for it in digital yuan, trade over the M-Bridge platform, settles just like that, Saudi Arabia can take that digital yuan and send it back to Shanghai and request delivery out of Hong Kong, take metal right out. And China has made the yuan immediately convertible into gold without converting back into dollars.